One of the big questions is, what is money?
Practical purposes, it exists in a series of heterogeneous databases, very different databases.
Do you believe in crypto?
Digital currency may be an answer, but it is the highly speculative asset.
I do own Bitcoin.
There is no second best.
Welcome to the Crypto Curious podcast. Every Wednesday, we dive into the dynamic world of cryptocurrency. If you're new to crypto, we recommend starting with our early episodes where we break down the basics and give you a solid foundation to understand the crypto world. And for the crypto curious, the seasoned addict, or the industry insider, we're here to help you unpack the latest digital news. This week on the show, October starts red hot, which actually means green in the charts. We talk about the Genesis Act, and is this the beginning of the bank's fall? Thirdly, $21 million has disappeared into thin air. That's right, these things are still happening in the crypto landscape, and we'll tell you a little bit more about that story. My name's Tracy, and I'm joined by my co-host Blake as we bring you all things happening this week in the crypto space. Hey Blake, how you going?
Hey Trace, great to be back. Another exciting week, and crypto is at all-time highs. We'd love to see it. In particular, Bitcoin is charging, and the prophecies are true. Red September, October, here we are.
Yeah, that's it. We're very excited. Red September is over. October has begun with a bang. Blake's correct. So let's jump into our first story. As I said there, October is here, and crypto has come out swinging. Bitcoin and the broader market are sitting nicely in the green to start this week off as we sit here, time recording on the 7th. And a rally has already really kicked things off. Over $1.6 billion in short positions have actually been liquidated in the past 7 days, forcing the bears to cover as prices climb. So to top that off, Standard Chartered, who like to make some wild predictions, have dropped another bold one, and they are calling for Bitcoin to hit 135,000 very soon, as soon as maybe early next week, Blake. Do you think that's a massive call or what?
Yeah, we were looking at the seasonality of crypto, and I think that the average return for Bitcoin in October is 20%. So that's the average over the past 14 years or whatever. So that's really great. And I think that could happen in the next few weeks, and we would love to see it. Unfortunately, Ethereum is doing well, but at the end of the day, it's still lagging. It's still below its all-time high levels from 2021.
What happens here then? Do we see a Bitcoin pump and an Ethereum follow? I mean, you're right. I mean, look, it has reclaimed that $4,500 level. And as we record today, Blake, it's sitting at $4,700. But you're right. It's lagging. Yes.
We see Ethereum as the backbone of the financial infrastructure of tomorrow, but it's lagging, and maybe we're a bit early, Trace.
Well, we have said this in the past many times over the last few years that Bitcoin has its big run up, and then Ethereum goes next. And it's usually in good style too. It has a massive run up. So is it just still charging its batteries for that big run, do you think?
Yeah, but we see Bitcoin sitting well above its previous all-time highs, $125,000. Its previous all-time high was $67,000, almost double. But Ethereum can't even break its previous all-time high. So just a little bit of a sense check there. But why is this happening? People are talking about the US government has been unable to pass additional financing to run the government. And so many government organizations in the US have shut down over the past week, and people are looking at the risk of holding US treasuries or the risk of the US in general and moving into Bitcoin that's traditionally meant to be seen as an uncorrelated asset. But there are other items at play here as well, like we discussed, seasonality, macro factors, interest rates are coming off more and more. Yeah.
But look, I think like you just mentioned, then people are moving towards Bitcoin and gold. Gold's had a massive run up at the same time, and Bitcoin and gold don't usually correlate that, but they are at the moment. So many things at play here, but I'd love to see how that prediction from Standard Chartered plays out over the next few weeks and where Bitcoin goes, whether it does really smash a lot higher, but we shall see. Let's move on to our second story, Blake. Banks have ruled the deposit game for centuries, offering you nearly zero interest in the hope that you don't look for other alternatives. But now with the Genesis Act in the US fully in law, that era might be ending. So a managing partner at Mutual Capital has argued that legislation could really mark the end of the banks basically ripping off depositors at the moment. Blake, can you tell us a little bit more to listeners out there about the potential massive change that's happening here because of the Genesis Act? Maybe explaining a little bit about the Genesis Act for those who are unsure.
Yeah, the Genesis Act in the US regulates stablecoins and just sets some parameters around how they should be issued or created and how these tech companies need to design them. And the first and the biggest one is that they need to be one-to-one backed with real money. So when you have a stablecoin in your Ethereum wallet or in your Solana wallet, there's a dollar somewhere sitting in a bank account that backs that. So you can send it around the world as quickly and as much as you like, but it can always be redeemed for a real dollar. Now, there are some specific rules in the Genius Act that say that these stablecoin issuers cannot give a yield or an interest return. If you put in the bank, you might get 1.5% return per annum on your dollars deposited. But with stablecoins, the company that issues the token, they keep that as their fee for managing the payments network. Now, there's some loopholes poking its head up in this legislation that was just enacted in the last couple of months. Now, the stablecoin issuers like USDC and like Tether can't give a reward or the interest, but the exchanges or other platforms that hold a lot of these tokens, these stablecoins on behalf of everyday people or investors can potentially give a yield to their customers and fund it through a different means or do a deal with the stablecoin issuer so that the stablecoin issuer isn't directly paying it to the consumers, but rather it's paid through a different mechanism. So these things are going to pop their head up, and I think it is going to create lots of incentive for people to potentially move their funds from their bank account onto a cryptocurrency exchange because they could potentially get a better return. Instead of getting 1.5%, they could offer 3% or 4% or 10% to pull your money over to the crypto ecosystem.
For sure. And now I wanted to talk about that here in Australia, obviously, because we're also going down that path as well, following the US. So what's happening here in Australia to come in line with what's happening in the US, Blake?
Yeah, there were just some short-term relief from the financial regulator here in Australia, ASIC, who said that there's some particular exemptions for stablecoin issuers here and those that platforms that utilize stablecoins like cryptocurrency exchanges, which is making it a little bit easier for those operators in Australia until regulation comes in. Now, we don't have anything like the Genius Act coming in. Australia is approaching the regulation a little bit differently and looking to regulate not stablecoin issuers first and foremost, but rather the cryptocurrency platforms that you all know and love. But there's also a bigger issue that I want to speak about here, Trace. I think that the US is doing something quite tricky here. Now, every time that a dollar for a stablecoin is deposited into a bank and a token is issued, like a USDT token, the bank goes and buys US treasuries. So they give that dollar to the US government to pay their bills, right? But on the flip side, they're also creating a token that goes into circulation to buy digital assets, or you can buy services with it. So I believe this is going to function like a hidden inflation because you have $2 in the economy, right? But there's only one underlying actual redeemable asset, which is the US Treasury sitting in the bank's deposits. This is a hidden inflation. And as crypto gets bigger, this is going to essentially deflate or dilute away the US government's debt. Yeah, I could see it. Cryptocurrencies are already doing $27 trillion in volume per year. And off the back of a few $100 billion of actual issued tokens, now I think I could see a situation where there's tens of trillions of dollars of stable coins diluting away the US government debt.
Yes, that is very interesting information there, Blake. I think you're completely onto something there. So,
And there's been some recent videos of Russian politicians coming out in their media calling this out, saying that they want to dilute their debt away and move their debt into the cloud or into the crypto sphere. And that's potentially how they got this legislation through so quickly.
yes, this is a really interesting conversation. I love where you're going there. Okay, look, I think we're witnessing the beginning of a serious shift here, regardless, folks, and stablecoins could definitely become new kind of cash plus yield instrument, and the banks are definitely forced into a corner here, and 100% not great for the banks. I mean, they've fought this for a very long time, and there's nowhere for them to go here. Okay, we'll leave that one there and move on to our next segment. We have seen some wild headlines lately, but this one has got a big number attached to it. SBI Crypto, a subsidiary of Japan's financial giant SBI Group, has reportedly lost 21 million in a blockchain exploit. What makes this extra spooky is investigators are pointing towards North Korea-linked tactics yet again. Blake, you know a little bit about this one. You sent this story over to me yesterday, and a sleuth that we know in the crypto Twitter world, again, kind of Zach XBT, his name is, called this one out, didn't he?
Yeah, that's right. So it looks like $21 million has gone missing from a company called SBI Holdings, which is a big financial firm. And it looks like it's the North Korean hacking group, DPRK. And what they've done is they've stolen some Bitcoin, Ethereum, Litecoin, Dogecoin, and quickly moved it through Tornado Cash, which is a mixer. We've spoken about what mixers are before, but it's kind of mixes up your coins with other people's coins so that investigators can't track the trail of these assets. And it follows a similar pattern to other hacks that we've seen. Do you have any more info on this one, Trace?
Yeah, so when a crypto arm of a major crypto group like this get hit, look, it really asks a lot of questions around how this is done, who has done this, and how are they holding their crypto, which is why we look at people like Zach XBT to help here. And you talked about Tornado Cash. My question is, how does he see it come through the other side? Because it's meant to be a mixer, but he saw the large transaction come through at the other side of Tornado Cash. So he knew, like, is it small amounts that you can't see, but they can see the big amounts as they come through the other side? How does that work?
Yeah, so there's different ways that you can use mixers like Tornado Cash. Apparently, you can put in an amount of crypto for a certain amount of time. For example, you can put it in the mixer for 1 day, 2 days, 3 days, and then pull out your different amounts at different points of times. But if you're putting in, say, 100 Bitcoin and then you're pulling out 100 Bitcoin 24 hours later, it's going to be much easier to track than if they start staggering it out of the mixer. Now, this is not financial advice, but this is the way that investigators can, still track these coins through the mixers.
Yeah, look, we'd like to say that these big events of 21 million getting stolen don't happen anymore, but they do. Unfortunately, that's just the state of crypto. And as we've said many times on the show, you just need to be really tight with the way that you hold your crypto, making sure that you're checking your keys and you have everything up to date. So please make sure that you are scrutinizing all your wallets, making sure that you're up to date with the way you're holding your crypto. I think we'll leave it there and we'll go for a break. And when we come back, we've got lots of short, sharp news for you this week. Welcome back. You're listening to the Crypto Curious podcast. Time now for our short, sharp news bites brought to you by the Bamboo app. What's up first this week, Blake?
All right, we're seeing a flurry of IPOs. That's companies that are listing on the stock exchange in the US at the moment. And potentially this is resulting in us not seeing an alt season. An alt season is when we see smaller speculative coins go up in value substantially after lots of people get excited about investing into the ecosystem. But now maybe it's just going to be easier for people to participate in these ICOs instead of speculate on shitcoins. Some of the firms that are going, we've recently seen is Gemini, a large exchange. Kraken is coming up, another large international exchange. So I think this is interesting and, yeah, potentially killed this idea of the alt season.
Okay, up next, CleanSpark sells 48 million in Bitcoin. Now, CleanSpark is a Bitcoin miner, and Bitcoin miners have been going strength to strength at the moment as we are right at the endpoint of the bull run. These guys wrapped up September with 13,000 Bitcoin in its treasury after a strong month of production and sales. The company mined 629 Bitcoin, up 27% year on year, and sold 445 Bitcoin for around 48 million at an average price of 109,000. So this just highlights how the Bitcoin miners are managing their treasuries, and it's a really changing dynamic market for the Bitcoin miners, and their share prices are rising. Another way that you can invest in crypto without actually buying the product.
Yeah, and all of these miners have different strategies, ladies and gents. Some of them hold all their Bitcoin and they raise money from traditional means to operate the company. Others sell all their Bitcoin, invest into new mining equipment, and others sell some Bitcoin every month to pay for the operations and hold a little bit of Bitcoin to take advantage of the upside of the ecosystem. So all different strategies, and it'll be really interesting to see a comparison to about how these different strategies have performed over the past 4 years, because there's going to be some key differences there.
All right, what's up next?
Judge dismisses Yuga Labs lawsuit over the Howey test. So the Howey test is something that regulators use to figure out whether or not something is a security. And if it's a security, there's different regulatory and compliance implications. Now, Yuga Labs creates the Bored Ape Yacht Club NFTs and the Ape coin, but they have been found to not be a security. And this is a really big one. I think that creates precedent here and shows that NFTs are not securities and are collectibles.
Yep, there we go. Up next, Bitwise says Solana is the new Wall Street for tokenization. The CIO, Matt Hugh, declared that Solana is emerging as the go-to network for Wall Street, basically because he said of the speed and the throughput and the transaction finality made it especially attractive to institutional players. That's despite Ethereum still leading in on-chain stablecoin value. This is actually a pretty big call. I haven't seen anyone say anything quite like this before, but it definitely signals a potential shift in institutional preferences.
I wonder what's in Matt's bags there, Tracy.
Yeah, it's a very good question that you asked there, Blake. But yeah.
No, I understand where he's coming from. Obviously, Solana is an incredible network, and its mission all along has been to provide the infrastructure for Wall Street. At the end of the day, it's a little bit younger than Ethereum and still has a little bit of a way to go. But I see a day where that situation could play out.
Yep, a little bit riskier at the moment, but yeah, you're right. Okay, what's next?
Kalish knocks Polymarket off the prediction market throne. So we've talked about prediction markets before. Incredible platforms where you can bet on anything, politics, whether or not it's going to rain, and what Taylor Swift is going to say next in her upcoming interview. So all sorts of stuff going on there, but there's a little bit of a shake-up here. Kalish is another platform that's now become the biggest one as by volume, with $500 million of volume traded on the platform, but it's fully regulated in the US. Now, what's different about this one? I was doing some reading on this one, Trace, during the week, but it's got some big institutional backers from large investment banks and hedge funds. So it could be the case that these guys have brought on investors from some of these big firms, and now these big firms are using Kalish as their go-to. So this is a massively growing area and definitely one to watch. And I'm looking forward to having a play around with this one.
That is very interesting. I did, when you sent me this news article the other day, I jumped on and had a little look, because you can actually get to this one because Polymarket is blocked here in Australia, but I have seen it in the past before it was blocked. And this Kalshi one looks exactly the same.
Look quite similar. So the regulation piece is probably something that's allowed people to participate on this platform. And hedge funds and other investment firms could end up really gravitating towards these platforms.
Yeah, interesting one, but yeah. Okay, that's it, Blake, for the show. We will be back next week for another show bringing you all the crypto news. As always, there'll be plenty. Until then, stay curious, stay connected. You can do this by joining our Facebook group, our Instagram page. We've got a weekly newsletter to keep you up to date. If you would like to, you can subscribe to make sure that you get the podcast every week. There's a subscribe button wherever you're listening to the podcast now. If you're looking at $2 cost average into the crypto market, have a look at the Bamboo app. There's a link in the show notes below that'll give you $10 of free Bitcoin to get you started. Please join us again next week. That's it, folks. Bye for now.
Bye, guys.